Hello, today let us look at the statement of financial position, which was commonly known as the balance sheet. Okay, and a set of financial statements usually has the statement of profit or loss and other comprehensive income, which was commonly known as the income statement. And then we have the statement of changes in equity and the statement of cash flows, and now the statement of financial position, which as mentioned was referred to as the balance sheet. And this is what you're going to look at today. We look at the other statements in other videos, okay? And the statement of financial position, as illustrated by the name, it shows the financial position of a business at a specific point in time. By at a specific point in time, I mean it shows the account balance as at a specific point in time. So let's say, for example, as at 31st December 2025, this is what the business owns, that is the assets, and what a business owes, that is the liabilities plus equity. Okay, so it's basically the account balances as at a specific point in time. Okay, the core principle behind it is that the accounting equation, which is the asset is equal to liabilities plus equity of that business. And once we are able to formulate, or rather create, the trial balance, then it is easy to create the balance sheet, because the balance sheet is basically a summary report of the trial balance. Okay, and now we have to restructure the equity before we can create the balance sheet. So we need to calculate the profit or loss by taking revenue, okay, and deducting expenses. And now we will be able to see what is our retained earnings. Remember, retained earnings is basically the profit that company keeps for future use. Okay, so then with that we'll be able to restructure our equity. Now let us look at a practical example to get an understanding of how we go about in creating the balance sheet. So we have this trial balance for KM Traders as at 31st March 2026, and these are the account balances, and we want to create the balance sheet. Okay, we have account balances for cash, inventory, equipment, accounts receivable, cost of sales, rent expense, salaries expense, drawings, capital, sales revenue, accounts payable, and loan. Okay, and at this point we can see the trial balance is balanced. The debits are equal to the credits. Now let's go and create the balance sheet. The first thing, as mentioned earlier, you need to calculate the profit or loss. So we have a sales revenue of 50,000, okay, and we have a cost of sales of 20,000. So we need first to calculate the gross profit, which is going to be 50,000, okay, minus 20,000. 20,000 is the cost of sales, so we are going to have 30,000. okay, this is the gross profit, because it includes having the revenue minus the cost of sales, the sales revenue minus the cost of sales. Now let us look at the other expenses that are there. We have rent expense, okay, and we have salaries expense. Okay, 8,000 plus 7,000 is 15,000. So we need to calculate the net profit, which is basically going to be 30,000 minus 8,000 minus 7,000. That is deducting the other expenses. Okay, and you're going to have 15,000 as the net profit. This is basically what we call the retained earnings. The retained earnings. Okay, now let us look at how the equity is. So we have equity, we have capital of 90,000, capital of 90,000, capital of 90,000. And know that we have drawings. Remember, as mentioned earlier in the previous video, drawings, they reduce the owner's capital. So we need drawings is what the owner of the business withdraws from the business. So drawings will always reduce the owner's capital. So let us reduce that. 90,000, our new capital will be 90,000 minus 10,000. So we are going to have 80,000. Okay. And now our retained earnings, which is also forms part of the capital, is going to be 15,000. Okay. Now let us go to the balance sheet. The balance sheet, first thing you should always make sure you have is the name of the company or the business, and indicate this statement of financial position it is as at 31st March 2026. Okay. As per IAS 1, this statement is called the statement of financial position, not the balance sheet. Balance sheet was a common name that was used before, so always maintain the name statement of financial position. Okay. So the structure of the balance sheet, or rather the statement of financial position, is for the assets, usually classify them to the non-current assets and the current assets. And for liabilities also, we have the current liabilities and the non-current liabilities. And then now we have equity. So we usually have three main breakdown, that is the assets, okay, the liabilities, and equity. And from each, for both assets and liabilities, there is the non-current, current, non-current, and non-current and current assets, and current liabilities and non-current liabilities. Okay. So let us look at the balances. Okay. So for the non-current assets, we have equipment. Okay. And equipment, we have a balance of 30,000. Okay. 30,000. And then what does our inventory have? Our inventory has a balance of 25,000. 25,000. Our account receivable has 15,000. It has 15,000. What about our cash account? We have 40,000. Yeah, 40,000. Now let us look at the total asset, which is basically non-current assets plus current assets. So 30,000 plus 25 plus 15 plus 40, which gives us 110,000. Okay. Now let us look at the liabilities. Let's start with the current liabilities. We have the account payable. The accounts payable, we have a balance of 5,000. So we're going to have here 5,000. Then for the non-current liabilities, we have the loan. We have a loan of 10,000. Okay. So we have a loan of 10,000. And then our total liabilities are going to be the current plus non-current liabilities, which will give us 15,000. Okay. Now let us look at equity. We have recalculated our equity by reducing drawings. So we have had 90,000 minus 10,000, and we got 80,000. So here we are going to have a balance of 80,000. Okay. Remember now the retained earnings, or rather the net profit, where we calculated and got the retained earnings as 15,000. Okay, so what is the total here? 80,000 plus 15 is 95. Okay, so here we're going to have 95,000. Okay, now when you look at this, what is the total liabilities plus total equity? We are going to have 95,000 plus 15,000. Okay, that is total liabilities plus equity. So that is going to give us 110,000. Okay, to know if your balance sheet is okay, the balance for the asset should be equal to the total for liabilities and equity. Recall the accounting equation, which states that assets of a business are always equal to liabilities plus equity at a specific point in time. So you're going to see we have our assets of 110, and then our liabilities is 95. Okay, and equity is 95. Okay, so our liability is 15. So you're going to see this is also equal to 110,000. 5,000. And this is basically what the statement of financial position looks like. So we are going to look at more examples and look at more different components that make the statement of financial position.